Just joining us, it is your number one authoritative business radio. That is Broad Street Radio. Yes, and of course, my name still remains Charles Farcroha. It is your favorite show, Investors Education. You know, we are very passionate when it comes to investors education. So we'll continue from where we stop. We're looking at green finance. Let's look at part two. I know it can even take us to part three, part four, but let's see what we can do today in part two. Yes, we spoke about green finance. We laid the foundation. So today we're just going to continue. We'll be looking at green financial instruments and markets. So basically, green finance has to do with looking at the environment before we make any investment decision. And it is not just the environment, we're looking at ESG, that is the environment, social, and governance. So today we'll be looking at some financial instruments, and let's just take it briefly. Green financial instruments, the first one is a green bond. And basically, it is specifically used to finance environmentally friendly projects such as renewable energy, sustainable infrastructure, and green building. So once it's a green bond, and that's why on Broad Street Radio we're encouraging even mortgage experts, Federal Mortgage Bank of Nigeria, Mortgage Bankers Association of Nigeria, to begin to look at green mortgages, green loans. So that is for green bonds, specifically, used to finance environmentally friendly projects. We also have green loans, of course, loans provided for environmentally friendly projects or activities, often with a favorable terms such as lower interest rates. So financial institutions, they use it to encourage people to become green, go into more green projects. So if you are taking a loan and that facility is to support green project, you will see that the rate of interest, your interest rate is likely going to be reduced, because financial institutions who are already on top of their game will want to encourage everybody to go into green finance. We also have carbon credits. We're looking at the financial instruments when we're talking about green finance. Carbon credits. These are tradable certificates representing the right to emit a certain amount of greenhouse gases used to finance emission reducing projects. Now, in fact, in Nigeria, we're even going to establish our own carbon market. This is just to encourage companies to reduce their emission of greenhouse gases. Okay? So, when you have that certificate, there is already a promise that you want to reduce your emission of these greenhouse gases. Okay, so that is the carbon credit. So the market is still very infancy in Nigeria, but I believe with time, we're going to understand it much more better. We also have sustainability linked loans that tied interest rates to the borrower's sustainability performance. So you can see that companies that are really putting sustainability issues in their strategy, when they want to obtain certain facilities, they look at how they've been able to incorporate sustainability in the overall operation, and that will now determine the interest rate for that loan. So you can see that they're encouraging everybody to get involved in green finance. Then we also have environmental, social governance funds, investment funds that consider ESG factors in their investment decisions. So these are some of the green instruments, that we encourage issuers to take advantage in terms of their transition to becoming sustainable companies. Green financial instrument. Now, let's look at green financial markets. We have the green bond market, a market for green bonds, which has grown significantly in recent years with issuance from government, corporation, and financial institutions. Yes, if you look at the NGX, you can see that the federal government has already, is in that market, the green bond market, though there is being called the impact bond. Federal Ministry of Environment has been there, to see how they can raise funds to support our environment. So, and that's why it is at this stage that most finance professionals should take a lot of courses, a lot of training when it comes to green finance, because that is where finance has gone. Carbon markets, a market for buying and selling of carbon credit, which help to reduce greenhouse gas emission. Like I said earlier, that's also in its infancy, and we know that with time it is going to grow very well. That every player in this green finance or finance generally will understand what the carbon market is all about. Sustainable stock exchanges. Yes, I also mentioned that the NGX platform, it's a sustainable exchange, and that is why they continue to encourage their listed corporates, to be sustainable in all their operations. ESG is also key, and in fact, some of these companies that are listed there are already doing their sustainability reporting. Okay, so it's just a matter of time, and we'll see that it is not just going to be because of regulatory issues, but because these companies know and they are aware that they just have to get involved with sustainability issues. Because if you are in a platform that is sustainable, you have no choice to be sustainable. So stock exchanges that promote sustainable investing and provide a platform for companies to issue green bonds and other sustainable financial instruments. Green banking. Banking services that promote environmentally friendly practices such as green loans and green credit card. Yes, the banks are also encouraged to go green in terms of supporting sustainable projects in their operations. So what are the benefits of these green instruments and this market? One, environmental benefit. We will always continue to emphasize that environmental benefits. Green financial instruments and market can help reduce greenhouse gases emission, promote sustainable development, and protect the environment. I keep saying it. This planet Earth is the only planet that we can live for now. So it is better that we make it a better place when we are living. Yes. So let us continue to support environmental issues that will make the planet a better place for us to live. So that's one of the benefits, environmental benefits. We also have economic benefits. Green financial instruments and market can provide new investment opportunities, create jobs, and stimulate economic growth. So we are seeing that yes, people are going into renewable energy. So you can see that solar, wind. So you can see that it's a new sector in the economy being developed. So that's also an economic benefit. Social benefit. Green financial instruments and market can help promote social justice, reduce inequality, and improve public health. When we look at the ESG, environment, social, and governance, we're also looking at the labor practice. When you're talking of the social governance, how is this company being run? Do they have the required number of board of directors? Do they have all the board committees? So also looking at the governance structure in that company, not just only the environment, okay, or the profitability. You're also looking at the people. So you can see that ESG is all encompassing. So there is a lot of social benefits when we're looking at green instruments. What are the challenges and limitations? Of course, there are challenges and limitations when we are talking about green finance. Lack of standardization. In fact, there's not even a problem of reporting. There is even what some companies do, greenwashing. Okay, that is, some companies may engage in greenwashing, making false or misleading claims about the environmental benefit of their product or services. That is also a challenge, and it has to do with ethical issues. So we are not telling you to just become a sustainable or just abide by the principles overnight. It takes time. There is a transition. So, but don't just come out and tell your investors, what you are actually not doing. And that's why listed companies are encouraged to make their reports. Let us know where they are in terms of sustainability. So, lack of standardization is also a problem. So, green financial instruments and market lack standardization, making it difficult to compare and evaluate different products. So, what is the future outlook for green finance? It has a very big future, a brighter future. There is a greater demand, there is a growing demand for green financial instruments and market. It's expected to grow as investors, government, and corporates increasingly prioritize environmental sustainability. So, investors are encouraged to hold their companies accountable when it comes to issues of the environment, issues of child labor, and also issues of not just for the sake of profits. Increased regulation. Yes, I know the regulatory agencies, especially in the financial industry, financial sector, for SEC, we know that they are doing quite a lot when it comes to regulating that space, and a lot of capacity is being built. Government and regulatory bodies are expected to introduce new regulations and standards to promote green finance and to prevent green washing. So SEC has developed that capacity, and we're already seeing that. So when it comes to environmental, or when it comes to green finance, a lot of regulations, and which are not too different from what the operators are already used to. Yes, regulation, 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 because they all know that is for efficiency of the market, to create that fair and transparent market. So we're going to be seeing more and more regulations that will enhance green financing. Innovation and technology. Technological innovations such as blockchain, artificial intelligence are expected to play a key role in the development of green financial instruments and market. Of course, we're going to be seeing a lot of artificial intelligence playing that role in the future. Now, people are saying, okay, is it only in the capital market you talk of green finance? I say, no, even in the money market, we have green banking. What is actually green banking? Is it any different? Let's see. Green banking refers to the practice of banking in a way that promotes environmental sustainability and reduce harm to the environment. Because I have seen a banker would say, oh, we don't have factory, it's just the banking hall, so it doesn't concern us. And I've even seen young broadcasters say, okay, the banking industry, they don't pollute the environment. And I said, no. Look at the ecosystem. If as a banker, you provide credits and the facility is being used for projects that are detrimental to the environment, then we will not be saying you are practicing green banking. We will not be saying you are practicing sustainability banking. So you are involved by mere provision of those funds. And also as an investor, you invest in a company that is still using child labor, then that your investment will not be sustainable. It will not be a responsible investment. So you can see that the ecosystem, everybody is involved. So this green banking involves environmental risk management, assessing and managing environmental risks, associated with lending and as investment activities. So you have to know what your customers want to use the fund with, the kind of project, how are they operating to ensure they meet environmental standard. Sustainable financing, providing financing for environmental friendly projects and activities such as renewable energy and sustainable infrastructure. These are green banking. Of course, energy efficiency, green product and services, which we have mentioned earlier. So there are some green financial institutions. Yes, they might not be operating just as green financial institutions, but their activities, what they do, they incorporate those principles of green finance. So green financial institutions are institutions, they are financial institutions that prioritize environmental sustainability and social responsibility in their operations and investments. They include green banks, as we have seen. There are specialized banks that focus on financing environmentally friendly projects and activities. In future, I believe we're going to be seeing such banks, they will just be there to support environmentally friendly products. Sustainable investment funds that prioritize environmental sustainability and social responsibility in their investment decision. As the shareholders group, they begin to evolve in their advocacy, we're going to be seeing more of these groups coming up. And at the end of the day, it is, for one thing, responsible investment. Yes, there are some green financial institutions which we can just mention. Of course, in the country here, Nigeria today, yes, like I said, some of them are already operating, but they don't operate as just green bank or green mortgage bank. But in all the activities, they are encouraging and they are doing all they can, to ensure that all the operations are sustainable, and of course they take the environment into consideration. Not just the environment, the governance and the social into consideration for all their operations. So we have them currently, operating in the country. Let's look at sustainable investment and portfolio management. Because if you look at the definition of sustainability, sustainable development, the SDG, we are saying making this planet, making of the resources, and considering the future generation, because we did not inherit this planet from our forefathers. We borrowed it from our children yet unborn. So we need to preserve it, make it a better place for them to come. Now, when we say sustainable investment, what are we talking about? Sustainable investment, also known as socially responsible investment or environmentally social governance, that's the ESG investment, is an investment approach that considers the long-term impact of investment on society and the environment. Like I said, on the NGS, they have what they call an impact board. So they look at the long-term impact of investment on society and the environment. If you use child labor for your operations, you are making the profit now. Good. What happens to the people that you are making use of? You are destroying their future. What happens to the planet? You are destroying the planet. And that is why we talk about the concept of triple P. Profits, planet, and the people. Yes, businesses are there to make profit, but at you are making profit, it should not be to the detriment of your people and, of course, the planet. Types of sustainable investment. Sustainable investment can be categorized into three main. We have the environmental investing, that is an investing in companies or projects that promote environmental sustainability, such as renewable energy, sustainable agriculture, and of course, green infrastructure. That is one aspect of sustainable investment. That's environmental investing. You also have the social investing. Social investing, investing in companies or projects that promote social justice, equality, and human rights, such as affordable housing, education, and health care. That is the social aspect of this sustainable investing. Then, of course, governance investing. Investing in companies or projects that promote good governance, transparency, and accountability, such as corporate governance, anti-corruption, and transparency. So you can see that this ESG concept of investing is very, very holistic, and we encourage every investor to look at it very well. And of course, every corporate that is coming to the market should also imbibe those principles of ESG. So we are looking at the sustainable investment. We have seen the types of sustainable investment. Let's move on straight to look at the benefit of sustainable investment. There are a lot of them. Sustainable investment offers several benefits, including long-term investment. Sustainable investment offers several benefits. We're talking of long-term financial performance. Sustainable investment can provide long-term financial returns while minimizing negative environmental and social impacts. Risk management, reputation, and branding. Let me even explain the risk management as a benefit of sustainable investment. Sustainable investments can help manage risks associated with environmental degradation, social unrest, and governance failure. Another benefit is reputation and branding. Sustainable investment can enhance a company's reputation and branding by demonstrating its commitment to environmental sustainability and social responsibility. So, if you see some of the listed corporates, when you look at their report, because they have to give report on their sustainability activities. When you see that they are operating in a community, they have provided solar panels for the community to make use of in terms of their energy needs. They provide portable water, solar driven. When you go to the community school, they have provided a lot of classrooms and all that. Even taking responsibility for payment of the teachers that are there, you will know that that company is a responsible company, and it's a company that you can invest in their securities. So we can see that sustainable investment is very, very important. There are a lot of benefits, and we encourage all the stakeholders to be involved. Now, sustainable portfolio management. You want to manage your portfolio, using the principles. Let's look at it. Sustainable portfolio management. Sustainable portfolio management is an investment approach that integrates sustainable investment considerations into portfolio management processes. Your portfolio, you have shares in a banking financial service security, you have in oil and gas, you have in telecoms, you have in agriculture. That is your portfolio. It can also be other asset class. It can be an ETF, it can even be a derivative, where you just have different asset class in your investment. That could be your portfolio. Now, what are the key principles of sustainable portfolio management? Sustainable portfolio management is guided by several key principles. One, ESG integration. If you are talking about sustainable portfolio investment, ESG integration must be there. That is integrating environment, social governance, consideration into the investment decision-making process. Then active ownership, long-term focus. Sustainable investment is not a short-term investment, it's a long-term focus. Sustainable portfolio management strategy. Now, several sustainable portfolio management strategies can be employed, including the ESG screening. Screening investment based on ESG. You want to invest in a company security. You want to screen and see whether the company is actually, applying the ESG principle. So you look at the their performance when it comes to ESG. What are they doing in terms of the environment? Did they just discharge without treating their wastes? How do they employ people? How do they remunerate their workers in their board? So these are the things you begin to look at. Then, of course, impact investment. Investing in companies and projects that generate positive environmental and social impacts alongside financial returns. So it's all about impact, positive impact on the environment. What are the best practices for sustainable investment and portfolio management? We just take them briefly. Yeah, you have to develop a sustainable investment policy. Develop a clear sustainable investment policy that outlines the investment approach, ESG criteria, and of course, engagement and strategies. Integrate ESG consideration. Integrate ESG considerations into the investment decision-making process to minimize negative environmental and social impacts. Then engage with the companies. Engage with companies to promote sustainable practices and improve ESG performance. Yes, and that's where the shareholder comes in. You need to engage with the company to ensure that they imbibe by the ESG principle, because for the benefit of not only for the company, but also for their other stakeholders. Then you monitor and evaluate performance. Monitor and evaluate the performance of sustainable investments and portfolio to ensure they meet the financial and ESG objective. We're not saying forget the financial returns. Financial returns is key, is there, but at the same time, the ESG principle must be in place. So disclose sustainable investment activities. Disclose sustainable investment activities and performance to stakeholders, including the investors, the clients, and the regulators, the host communities, government, and every other person. A research is still ongoing. People are saying, okay, if a company is involved or they imbibe the principle of ESG in all their operations, and over a period of time, will they be more profitable compared to a company that has not, imbibed by the ESG principle? But yes, in the short run, it might appear that companies that are not imbibing sustainable investment principles seem to be doing well. But over a period of time, we will discover that companies that has made sustainability investment as part of their strategy, ESG, will tend to perform better, improve their brand name. And of course, what are investors looking for in an investment? A company with a good reputation. So it is not all about, it's not greenwashing. Sustainable investment is going to improve the reputation of companies that are imbibing ESG. And at the same time, they will be protecting the environment, because there is a purpose why we are all here on planet Earth. And it's our duty to ensure that we make it a better place for our children yet unborn. Thank you.